You found this amazing new strategy on YouTube and you're now convinced that it's the one that will finally work. Then the market throws a curveball and all of those winning trades are nowhere to be found. So naturally, you go back on YouTube and you search again for another trading strategy, another sure thing, hoping that this time it's going to be different. And guess what? That cycle often repeats itself. Now, let's be real for a second. What's the underlying issue for constantly ditching your strategy at the first sign of trouble and a few losses? Now, think about flipping a coin. If you flip a coin and get 5 heads in a row, are you going to assume that that coin is fake? Probably not, right? Because you understand that sometimes you might get a run of the exact same result. Well, the market can be like that in the short term, where you experience a series of losses and your strategy is frustrating you and you think that it's not working. But here's the thing that you really need to understand. Giving up on your approach after a few bad trades is like saying a coin is fake after you've flipped it a few times and gotten the same head or tail result. Over a large number of flips, let's say you flip the coin 1,000 times, you'd expect over time to see maybe a 50-50, percentage of the heads and the tail. Now, trading works the exact same way because individual trades can feel really random and unpredictable, but over a long period of time, you start to develop what we call an edge in the market. That is when you now have a trading system. So instead of throwing in the towel after a few losses, give your system, a series of trades, maybe 100 or even more. Let it play out, give it some breathing room. Then you decide whether it's effective or not. Otherwise, you might just be tripping over some up and downs that the markets are giving. So the law of numbers is a big thing, and ignoring that might end up leading you into the wrong path when it comes to trading. So today, I am going to show you exactly how I trade. I am going to break down using a real life example the strategy that I've been relying on over the past few years. And the best part, this is not some guru complicated secret. It is actually incredibly straightforward. All I need you to do is to eliminate distractions, give me your full attention because you don't want to miss any of the details that I'm going to break down in this particular video. Now, I'm going to break down everything in 3 steps, and if you end up not understanding it at the end of the video, just make sure to rewatch it again. And those of you that are already used to the channel, you know that I like to trade the NASDAQ, US30, and the king of volatility, which is gold. So these are the grounds I will be playing on. That's where my strategy truly shines. Feel free to use the core principle behind this because it's actually universal. You can use it on any chart of your choice. Just take the framework, unleash it on any chart that catches your eye, maybe something that you're always trading. Who knows what you might discover? So make sure you experiment and see what works best for you. Now let's dive straight onto the charts. But before we do that, if you're new, find the channel for the first time, welcome. We trade the NASDAQ over here. If you're returning, welcome back. You already know what's up. Don't forget to hit that like button, turn your post notifications, and subscribe to the channel. Now, the very first thing that I want you to do is to get a sense of the overall market direction. So as I go on to my charts, I want you to think of the overall direction like looking at a map, right? So before you plan your route, you need to look at a map. So to do this, you have to go on to the higher time frame. So right here, as you can see, I am on my daily time frame and it's open. This means that each candlestick that you're seeing here represents a full day of trading activity. Now, what are we looking for on this higher time frame? We're looking for key support and resistance levels. So support only if you're on an uptrend and resistance only when you're on a downtrend. That's it. Step 1 is done. Let's go to step 2. You have to wait for the market to come to you. Now, we have identified these important zones on the higher time frame. We don't just jump into a trade. We need to be patient and wait for the market to come to us. So after you mark up your support and resistance levels, you have to wait for the market to get into those zones. Now, as you can see, the price has already moved and is now in my support area. Why support? Because we are on an uptrend. This is exactly what we want to see if we're anticipating a potential move upwards based on the higher time frame analysis. So this waiting game is actually really crucial, right? So if price has not yet gone into your support or resistance area on the higher time frame, the first thing you need to do is to wait for that to happen. That's it. Step 2 is completed. Let's go to step 3. You have to refine your entry on the lower time frame. Now, once the market reaches your identified support or resistance levels on the higher time frame, then you can now zoom in and look down for more precise entry points. We do this by dropping to the lower time frame, and right now I'm going to switch to the 30-minute time frame. Now what it means is each candlestick here is representing 30 minutes of trading activity, right? And here's the key on this lower time frame. The only thing you need to do right now is to analyze the current market condition. Now remember, you already have a bias from the daily time frame. We need to just keep that at the back of our mind. So in this particular example that I'm using here, our bias is bullish because the price is sitting at a support level on the overall daily time frame, and is also on an uptrend. Now market conditions, they can look very different in various situations, and that is why paying attention now is really important. So this is no one size fits all answer, right? But here we now start looking for clues that the market wants to respect our overall daily time frame bias. So that right there is what I want you to pay attention to. After you watch this video, you are going to do the exact same thing on the higher time frames. Open the 30-minute time frame, and the whole dynamics is going to change, because that is what the current market conditions on that particular chart you would have opened is saying. Now you should be able to analyze that and explain it and break it down so that it matches and confirms with the higher time frame and the bias that you already have. Now in this specific case on the 30-minute time frame, we are seeing what I like to call a liquidity zone right here. So you just want to think of it like this, right? At this price level, there are a lot of pending orders, right? We have a lot of buy orders, sell orders, and even stop losses, right? Especially especially stop loss orders, from other traders at this level. Now this is an area where a significant amount of money is resting, waiting to be triggered. And just by understanding that, I know that the market has a tendency of going to tap these levels before it makes its next significant move. So that's already a clue right there. And now if you notice, in our current scenario, this dip that we have right here makes perfect sense when we tie it back together with our higher time frame analysis. Remember, on the daily chart, we identified a strong support level, and the overall trend suggested a bullish direction, right? So this little drop that we are seeing on the 30-minute time frame, it could very well be the market sweeping out those pending orders in the liquidity zone before it heads upwards, right? So it's kind of playing in line with our bigger picture. So think about it. Obviously at this point, we'd have traders that have to feel a little bit of pain because they entered short positions prematurely at this level. They're thinking the market is already heading down, forgetting the overall trend direction, which is bullish, right? And the market might need to just go back down to hit their stop losses, which often sits below liquidity zone before it has the momentum to push up higher and continue with the overall trend. So the price is down right here now, but we have a good reason to believe that it needs to go up first before it does anything else. And that is the pool of liquidity that is sitting above right now. The crucial point to understand is the market will do what it wants. Nothing is 100% guaranteed in trading. You should always remember that. But we're looking for probabilities and confluence, things that increase the likelihood of our trade playing out. So what we want to do now is to mark up our point of interest or our area of value. This is the zone where we're likely to enter the trade. So even when you're on the lower time frames like the 30 minutes, having an area of value is essential. It helps you to determine, a potential stop loss, where you're going to place your stop loss orders, and it has to make sense. So a good stop loss is usually placed, below a support level, a clear support level. In this case, I'm going to choose this lower bottom here. I normally like to target the lower support within a potential zone. We're looking to buy right now because the market, remember, you wait for the market to come into your point of interest, and right now it's already here. And our targets, at least initially, right, we're going to target the liquidity zone that we identified earlier. Now we don't necessarily expect the market to break out of that resistance immediately. We are just looking for a good solid move upwards from our entry point that we have right now. We're just going to let the trade run for a few minutes, then we come back later and see, maybe just after one candlestick close that's like 30 minutes, then we see what would have happened. Stuck on your phone, stuck in your zone. You don't ever, but I don't want to give up. Baby, I just want you to Alright guys, as you can see, I actually took this trade earlier with my inner circle, and I even shared this with the free group, and you can see about 30-45 minutes, not even an hour, nothing too crazy. Market kept pushing upwards exactly as we anticipated, and finally it has gotten up to our resistance level. The only thing that's left now is for a potential wipe out of that liquidity, right? And just look at that. It's currently breaking out of this zone, and at this point we are up around 155 pips on each of the three positions that we were trading in the group. And this is where you would want to think about protecting your profit, because you have seen the movement, you have seen the trade playing out. So we want to move our stop loss to break even at this point, so that whatever happens next, the trade is now risk free. So yeah, that's basically it. That's how you can approach this type of trading strategy and trading system. It's actually very simple and straightforward when you break it down and focus on the key areas on the chart. I'm actually used to trading this type of setup. That's one I'm always trading most of the times, right? So you just need to go and back test this. So if you found this breakdown helpful, do me a favor, drop a like on the video, turn your post notifications, and subscribe to the channel. With that, it's Bettina, and I'll see you in the next lit video. Love you guys.